Hello, I am Lisa J. Stocks. Thank you for tuning in for this week's Stock Talk episode. We're going to be talking about getting started with investing. And at the end of the show, I will touch on a little bit with current events and what I had going on Friday if we have time. But I want to get through the topic and then we will have some open chat. Thank you guys for tuning in. Make sure to give the live a thumbs up. So let's get started with some different points here. Hello, Dr. Ninja Rod. Thank you guys for tuning in and chatting. All right, so we're going to start off with how to get started investing and getting started the right way. And we all start from somewhere. We're going to start from zero. And we need to just not be intimidated by investing and just know that it is manageable, make a realistic way about going about it, and know that it's for all of us. Whether you're completely new, you heard some bad things, you're a little nervous, make sure to take the time to build up your confidence, get around people that can help you on the journey. But I want you to build a strong foundation and build and grow your portfolios so that you can have the ability to build up your portfolio in a way that you can't in any other way. It's not going to happen by putting your money in the bank. Yes, there are other things, other businesses, real estate, and other things that I also do, but investing is a big part of what has helped me and so many others in order to build up their wealth. So let's get on to some different steps that you can take. And guys, in the chat, as I'm sharing the different points, tell me where you're at on this particular point on your journey. We'll start off with number one, which is, what are you investing for? What is your why? For many people, they think you have to just jump in and decide, what am I investing into? But we're going to start even before that. We're going to start with, what is your reason for investing? That should be your first step. You have to know, what is your goal? For me, my step one into getting started in investing was I started working. I started contributing to my 401k. And so retirement was my first goal. And for a long time, all of the investing that I did. Let me know if that's where you guys started out with investing. I wish it had started sooner, but that's the beginning for me. And I think for a lot of people, depending on your budget, depending on, how much you want to focus on putting work and your income into investing, that might be the start and finish, is just building up your retirement fund. But there are so many different things. Now, later in life, I've incorporated not just focusing on those retirement accounts, but knowing that I can use investing as an avenue to grow my wealth for whatever it is. I know Rod has said that, he had an investment portfolio that he can use towards buying his next car and different things like that. Your home, of course, with the kids, their education, or just getting them started off in life. So there's so many things that you can take advantage of at different stages in order to increase that money through investing. So write down your goals, know what the time horizon is, and revisit them from time to time. Over the last few weeks, I've been doing a couple of shows talking about the 4% rule, using that investment calculator, but figure out what it is you want to invest for. Okay, you guys are already retired, so you did the work already with building that retirement fund. Fast Eddie and Dr. Ninja. Oh, Rod, yes, Rod lost his car. Well, it was badly damaged, so he had to get a car. It was a need, not a want. I think that's what he's trying to share there. All right, so now after we know what our reason for investing is, then we have to start to get into the real detail of what type of account suits the needs of what we're focusing on. Now, adults, working adults, I think that the priority should be retirement first and foremost. Of course, yes, we need to be planning for a car, home, so many different things that, early retirement, but we need to save and invest, focus on that true retirement age. In my opinion, that's priority number one. So, with that, if you're working, it's kind of built in for you, that 401k or that 403b. But if you're not working in a company that provides that for you, then you can get in touch with a brokerage company and go over if a Roth IRA or what type of account suits your needs. There are many different. Over the last few weeks, I've been touching on this too, but I want to just continue to let everyone know that these are investing is for all of us, and we just have to take these steps and we can get it accomplished, whether it's for ourselves, whether it's for our children, whether it's for people around us that, need these insights on. It's not hard. Let's just take it step by step and just work our way through it so you can get on board. And so, of course, with those different plans, there are different flexibility and different options. You just have to work through it to find out what's the right one for you. I would say I do a bit of almost everything. I have, true retirement accounts that I do not plan on touching until I am past that 59 and a half or later 60s age. And then I have accounts for my daughter. I have taxable accounts. I even have an investment account in my business under my business name. And so I'm touching a lot of different points there. And I do not have a 529 plan for my daughter. She only has a UTMA account, but quite a few other things and, flexibility to do options. I invest into crypto. I think a little bit of it all. But that came over time, and I didn't jump into anything without being sure that I was ready and having the knowledge and true desire to focus on what it was that I was incorporating into my financial journey there. Okay, so that is step number one. Why are you investing? Step number two, choosing the right account for the goals that you have that you're striving for. And while we still have these employers that are hopefully contributing a portion towards our 401k, I always want to remind everyone to not leave that money on the table. Get that company match and make sure that you're being aware of all of the options that you have, even though, they choose what you can invest into under that 401k. There could be better options than what you are automatically defaulted into. All right, so now on to step number 3. Once you choose that account, you have to open it. You have to give all your information in detail. You have to link it to a bank account in order to get money into the account. So don't be intimidated by those steps, and don't keep putting it off. If you see someone, if it's you that are watching, don't put it off. Make that a priority because it's really not hard. I've opened accounts. I've gotten so much done without ever leaving my house. Give them a call. They will walk you through different steps on, what you need to find on the website, how you need to submit your documentation. I know I did my daughter's account 100% remotely that way. I didn't have to take time off or deal with the hassle of going in person over to Fidelity, which is the brokerage that I use for those type of accounts. So set up the accounts, fund it. You have to give all your details, Social Security, your ID, all those different things. Fidelity does not have any minimums related to opening up accounts. So that's been a plus for me, as well as they have lots of low cost in index funds that you can choose from there. So without, just like I said, no requirement to open the account, no minimums. So you don't have to wait. You can just get started. Even if it's $25, $50, you'll be on your way as soon as possible. Um, so you have decisions to make here as to which brokerage you want to use, how much you want to start with, how often you want to contribute. But those are just steps that you just have to take in order to, get this accomplished. I think it's a good thing to automate some amount of contributions and automate some investments so that you're automatically, without you even having to lift a finger, you're using dollar cost averaging, buying a little bit over time. When you hear about different stocks, even crypto, Bitcoin, no matter what the price, there is no investment that I've wanted into my portfolio that the price is an obstacle, because on many of these brokerages, Fidelity is $1, Webull is $1. Some others like Moomoo, it's $5. So they are very small amounts that you can get started with in order to build up over time. And I didn't know when I started this challenge that I started, I think towards the end of 2022, I was doing $10 a day into VTI. I'm still doing it, but being consistent is what has allowed that $10 a day is now over $10,000. So a while back, I was doing a live and I was talking about, investing those small amounts, $5, $10. Of course, I want you to do more than that, especially for retirement, out of your paycheck. I want you to strive for 15% between what you're contributing and your employer. That's ideal. That's what, these, Fidelity recommends and these type of institutions. But when I talk about doing extra accounts, investing for my daughter, when I talk about $5, $10, I'm not talking about once in a while. Stick to it. I mean, by those small investments, $5, $10 at a time, I've done it for long stretches of time on certain investments, and I might turn it on for 3 months or 4 months on a particular investment that I want to increase in my portfolio. And then from there, I can not do it on a daily basis. I can put it down to weekly or something like that. But those small amounts really add up over time. And so the person, back to what I was saying, I was on a live a while back and I was talking about those small $5 and $10 investments. And the person in the chat was like, well, this is a joke, right? Like, you invest $5 or $10, like it didn't sound like investing to them. But I take my small investments seriously. And when you see what it could build to over time, even if it is just something extra that you're adding into your, whole investment plan outside of your true, retirement at your 401k, a lot of the things that I do share on the channel are those extra investments, additional things that I'm incorporating, as well as like, I put out a video this morning about my FXAIX. That investment is truly for retirement, but I have different buckets because I've been laid off a few times. And so I have different accounts that I have built up. And when I go into my Fidelity account on my computer, I can see them all lined up. Some of them are not as conservative as being so heavily into FXAIX, but over time, I started to structure and incorporate different things. So I take all of my investments very seriously, is the point I want to make, that it's a matter of being consistent of what that small investment can turn into over time. And everyone's budget is different. So I don't want anyone to ever feel like, well, just think about the percentage. If we're all doing, whether it's investing, whether it's trading, if three of us were sitting down together and we were doing, trading options one particular morning, all of our budgets may be different. We may all buy the same contracts, but, you know, Rod may pick up 5 contracts, I might do 2, and Keenan Grace might do 25. Hi, Keenan, how are you? But at the same time, when we focus on what the percentage gain is, we all gain. And so I'm not going to be held back because I may not be able to buy as much as the next person. I may not be able to have 100 shares of Apple and Microsoft and whatever in my portfolio. I just have to build wealth on the scale that I am able to accomplish based on my budget. And so I'm not going to let anything hold me back from focus on building up my portfolio. All right, so now we've done 3 points so far, and point number 4 is picking what to invest into. And this is where people get stuck. Yes, we have to pick that account, fund that account, know what our why is, set some goals for ourselves as to what we want to achieve over time. And then we have to know what we want to invest into. And many people think individual stocks. And when I got started, I definitely did. I actually had my growth portfolio was over 50% Apple stock at one point. And then after working on Apple, I started with Amazon and Tesla, and yeah, I was just focused on those individual stocks. And then some small things that you probably might not have heard of, ChargePoint and different things like that. But all individual companies. I did not know about incorporating ETFs and researching them and having an understanding of you can have, lots of exposure to tech or healthcare or things like that. But in time I did. And that's when I actually, around 2022, when I incorporated VTI, building up that $10 a day portfolio, was when I wanted to incorporate more. That's exactly why I chose VTI for that particular challenge, is that I wanted to bring some more diversification automatically built in a low-cost way, instead of just having being so heavily weighted into just all these different individual stocks. I am glad that I've incorporated them because the growth that I've seen in the individual stocks is higher than my ETFs. I must admit that. But the stability, the steady dividends, and I just like the balance of having both. And so I'm taking a look at the chat. Thank you, Stock Brother, for tuning in. And okay, let's continue. Let's see who is in the. All right, so let's continue. Okay, so we're talking about what to invest into. Yes, we have those individual stocks. I incorporate those, but I'm going to have those mutual funds, ETFs on a larger scale. Do more mutual funds or index funds in my retirement accounts, and then I incorporate ETFs into my taxable accounts and my daughter's accounts and things like that. So, guys, let me know if you have any questions. I'm going to be taking a break soon to go through the chat. But I do a combination of different things. And when it comes to building my portfolio, I do sometimes incorporate things that are more speculative, those things that I consider a trade. Or if it's not officially a trade, if I have any apprehension about it, I'm going to put a stop loss on it in order to make sure that I am not over here stuck diamond handing anything. I'm here to make money, not lose money. And so I don't incorporate a lot of things with, a lot of volatility. Most of my portfolio are things that you are familiar with. It's Microsoft, it's Tesla, it's Nvidia, it's Amazon, and I'm comfortable with that. Every once in a while, I will incorporate something that, is something a little bit out of the box, out of the norm, and that's when I'll have my stop loss on. And the few things that I've incorporated, say over the last 10, 11 months, I like Quartz, CORT, for example. I have some Webull in my portfolio. Webull is an investment app. Some things like that. I have put a stop loss on, and my stop loss it's not triggered. And then, 3 months later, I have to put it on again because it expires. And so they seem like there will be things that can stay in my portfolio for the long term. But I did not want to take a huge loss on them. And so I have my stop loss on things like that. Now, Amazon, Apple, Nvidia, if they run into some drama, I'm going to hold. I don't have a stop loss on those type of investments. I'm just going to hold on and wait for the recovery on what they're going through. It's not very often that those investments have huge swings, but we have those days, and like we had back in April with Liberation Day. And I guess I'll touch on what happened on Friday in a minute, but I wanted to get through my topic points. But yes, and also want to touch on watching out for the fees and expenses, and just knowing your risk tolerance, your age, how long before you're going to need to tap into these investments. There are many different things that you have to think about, but I just want to encourage you to take the time, sort it out, do the work, and find a level of comfort. I personally don't think that you need to pay a financial advisor. You can do a lot of work on your own. You can call up your brokerage company. I know in my experience, I have called Fidelity. I've gone in person. I've gotten some insights from them, some direction, some assistance on things that I needed to. But I don't think that you need to necessarily jump in and think, I can't do it. I need a robo advisor. I need to pay for someone, or I need, a more managed funds that is going to have those higher fees associated with it. I really think that you can build wealth on your own with very easy choices, like investing into the S&P 500, for example. And then another thing, like I was saying, back when I had, a portfolio that was over 50% Apple stock. Yeah, that was betting on one company. When you shift the balance of having ETFs at a higher allocation in your portfolio, even when things, robo-advisors are a joke over there, Rod, even when things shift and, the entire stock market is impacted, you won't be as affected when it comes to your portfolio. There are going to be times when everything needs to recover, but sometimes, when you're directly into one particular company, you feel the impacts more in your portfolio. So I do a mix of different things. You can, like I did, take your time to build up to that, and you definitely don't have to do it all. You definitely do not ever have to get to the stage of trading and investing into crypto and these different things. Do what you're comfortable with, and do, like I said, what is in line with your goals and your risk tolerance. So Guys, let me know if you have any questions. And let me talk a little bit about what happened on Friday. I went more into detail on my video that I put out this morning, talking about, you know, what China announced and then how Trump, in the middle of, about 11 a.m. on Friday morning, decides to make his announcement uh, about the 100% tariff on China after they want to impose some license requirements on, foreign countries when we are doing work over in their country as related to those, what is it called? Earth, uh, I can't remember the word, but the minerals that they have so many of, I think over 90% exclusive from their area. And so we have to be ready for these things. I was not actually rare earths. Thank you. Thank you, Rod. And so when that news hit on Friday, I was already going to be doing, some of my basic investments that I do on a regular basis. I usually post over in the Discord what I am dollar cost averaging into and just sharing my daily buys. But I'll tell you, after seeing the news and watching the market, I was investing. I was investing until after the market had closed. I was buying SPMO, which is something that I wanted to come down. And guys, from a month ago, I was saying that historically, I was ready for a September where there would be buying opportunities. It didn't happen. And I think it was just last week I was talking about SPMO as a position that I wanted to build up. But yeah, it's been 120, 121. When I had made the decision to start building up the position, it was maybe about 117. And yeah, it wasn't coming down, but it did on Friday. And so, yeah, I got started with, I started my daily investments that I planned on doing. I shared a post, but I'll tell you, I was putting in limit orders throughout the whole afternoon, and they were filling, and the prices were dropping. And then I was putting in another one. And even in the after hours, a couple of my orders filled because you can't do fractional shares in the after hours, but I had some orders for full shares. And so I did have some orders that were still going through in the after hours because, yeah, prices were dropping. But I believe in what I invest into. And so I know that it's all related to the news catalysts on, what's going on with Trump and these tariffs. And so in time, my investments will recover. That's how I feel. That's what time has proven on reflecting back on what I was adding to my portfolio. And so I took it as a buying opportunity, which is what I usually do. I know that Wednesday back in April when we had Liberation Day, the Sunday after, I was having dinner at my mom's house and my family was there. And yeah, I had my notebook and my pen and paper and I was making my plan on what, how much money I had and where I planned on allocating it when the market opened on Monday or within those next 2 weeks. I didn't know exactly in what time frame I was going to be investing, but I knew that it was a time period that I was going to be doing extra because I could see that the market was going to take a real hit from what was going on, and it did. And I looking back to years ago, I was talking about recently about 2008 was a time period when I was pregnant and I was on bed rest and I was home, and it was a time period when out of, I didn't work for many months. And so it was a time period when I thought I should be conservative and, maybe stop the contributions to the 401k. I was getting my paycheck, but I was only getting, say, 70% of it. And, I wind up not making any adjustment. But now looking back to, what has occurred in certain years, 2022, the years when the market really drops, or the time periods like we had in April, like we had on Friday, because of the money mindset that I have now, I see it as an opportunity. And if I have the budget for it, I'm going to be going harder and building up my portfolios. And, like I said, not into everything. And if there is anything that I feel is on the speculative side that I'm a little nervous about, I can always put that stop loss on. And then, like I shared a little bit earlier, the things that I've had a stop loss on, it hasn't triggered. And so I'm putting it on because I want to make sure that I'm comfortable, and I know how much I would be willing to go down on. And I don't want to be stuck with any underperforming investments. Not that I want to sell investments before, in a short time frame, if they are truly an investment, not a trade. But, I, things have been working out more so in more recent years than they did, say, 6 years ago. But that's because I've been learning and growing and evolving when it comes to having a plan, when it comes to both my investing as well as trading. Okay. All right. So I went through my points, and I just want to always give encouragement that investing is for all of us. Do not be intimidated. Do not let the opportunity pass you by. Keep an eye on your investments in order to make sure that you zoom out. Don't panic. Don't worry about the daily swings. Don't worry about these news catalysts that shake up the market. You have to just build up your patience when it comes to it. And like I said, once you get a full understanding, then you'll know that those times when times are rough are not the times to bail out, to sell, to stop contributing. Those are the times where, if you stay consistent, you can really reap the rewards of what you've been trying to accomplish. But it all depends on what you are invested into. It's not everything does not turn around. But like I said, over time, I've gotten to the place where I feel, and I know I'm pretty comfortable with 95% of what's in my portfolio that I can hold long term, no stop loss. If something does happen, if it does drop a bit, it recovers. And so I'm going to go to the chat a little bit. I've already touched on a little bit of those current events. And, I shared in my video this morning on FXAIX position that I've been sharing for some time now, that when I started to prepare to put that video together, I think it was maybe Wednesday night, and then I didn't get around to editing it. And then I just redid it completely because, I just wanted to just give you a more up-to-date look. And I was down about $4,700 or $4,800 from the original, screenshots and things that I was pulling together. And we had just hit an all-time high on the 8th. And I just felt like, no, let me just let me just restart this and do some updating here, because we really had a real shake to the stock market on the 10th. And I don't want to just show my positions in my portfolio and just talk about things when, on those good days. If it just happened that I got my video completed on the 8th and it was a day when we had hit an all-time high, then fine. But I also want to show you guys that I'm okay with showing my portfolio and talking about those days when things are not looking perfect. I originally, I said in the video, I was over 175,000, but I had to revise that down to 170 because that's what happened. But it's okay. It's okay. It's the S&P 500. It's the total. It's when I talk about my investments, especially the total stock market, the S&P 500, it just needs time. And then again, we will be we'll be getting into another time period. I don't know when. We just went through so many already this year, all-time highs. And it's been building and growing for so long now that we know it will continue. All right, so now I'm just gonna use the rest of the show for just open chat and just take a look back as to some of the comments that I have not gotten a chance to read. Okay, so chat, Rod and Dr. Ninja over here talking about SPMO. Yes, I have a video about it, Dr. Ninja. I'm sure you will be able to find it easily. And like I said, I kind of built a new layer into my investing strategy. So my foundation, like level 1, would be like an S&P 500, a VTI, a VOO, a SPLG is another one instead of VOO, or FXAIX. But then for that more aggressive growth, next layer up is going to be like the SPMO. I've also been incorporating FSPGX. And then, above that are going to be those individual stocks. But in an ETF form, that is one that I've seen the growth that it has. Higher expense ratio at 0.13, but I think that the growth that the fund has had over the last, since its inception, has shown that it's been worth it. And it's a momentum ETF. And so there's 100 of the top, the companies with the highest momentum out of the S&P 500. So a couple different twists when it comes to that particular ETF. And it rebalances twice a year. And so newer to my portfolio, but one that I wanted to build up a significant position into. And so I was putting in limit orders all day on Friday afternoon on that one in order to build up my share size as the price was coming down into those places that I didn't, sometimes you don't know if you're going to have an opportunity. I had still been investing because I'm not going to stand still and be like, oh, I want it at 118 or 117. And, it's only going the other direction, 121, 122, 123. So I'm still going to invest. But when I saw that opportunity that it did come down to those lower price points that I wanted, I went heavier. And so, okay, let me take a look at the chat. I'm going to start from the bottom up. Do you use a spreadsheet or an app to track the numerous ETFs and individual stocks? I don't. I only use a spreadsheet to track my dividends because I was sharing on a monthly basis a dividend portfolio. I don't see the need to track just what I'm invested into. I have all of my retirement accounts at Fidelity. So even though I don't have, I have multiple IRAs, I have my business account, my daughter's accounts, even though it's just very easy for me to just look at them the way that they're all stacked up in there. And then I just recently did a breakdown by percentage, but that was only to create some videos related to, what I have in my portfolio and, how the structure that I have created more recently, um, based on what I was just describing, the basic foundation, kind of my more aggressive layer that I'm adding on top of that, and then the individual stocks, and then having cash on hands and cash to do options trades, but I don't do a lot of tracking there. Hey, Red, thank you for tuning in. I enjoyed talking to you the other day. I popped up on Red's panel the other day, and he asked me, like, what, Lisa, like, what happened? Was it something was there any like traumatic event or something that occurred? And I was like, yeah, Red, the traumatic event that keeps occurring is that I get laid off over and over. Vanex Semiconductor. Yes, I think that is a ETF that will give you some exposure to AI and those tech stocks. Yes. I always enjoy your updates, Lisa J. Thank you, Stock Brother. Now let's see what the one says. Investors, don't panic. This is the time to buy the companies you have been waiting for. Future millionaires are made. I went heavily. Stay strong. Thank you for that message. I agree with you 100%. Recessions make millionaires. I was always saying that in my very, very first videos when I started here on YouTube. I thought recession was right around the corner, but it wasn't. It wasn't, according to, I think they changed the definition on us when they want to. Okay, going back to see what other comments. I like that you were ready for the dip. I am not prepared for the dip. Oh, Dr. Ninja, get ready. If that's what you want to do, we have to be ready. But you can also, not everyone buys the dip. Not every, you have to go by your budget, what you're planned for. But yes, you definitely should at least stick to your regular investing schedule. Hey, Barry, thank you for tuning in. Yes. I have to check out this morning's video. I saw the thumbnail. Thank you. Yes, please do that, guys. Check out the video. I know I don't usually put out videos on Sunday, but like I said, was running behind. Rod even reached out to me and was like, Lisa, I haven't seen a video in a couple of days. What's going on? Are you okay? Thank you, Elevated. I hope I said hello to you today. Yes, we have to know what our risk management is. Dr. Ninja says, I have a tiny pension. I am aggressive with my investments because I live below my means. Yes. I'm interested in hearing more about your real estate. It seems like that's where you have really focused more so than investing on building up your wealth. Oh, I didn't even talk about crypto. Amazon is driving me nuts. However, so did XRP when I purchased it at 40 cents. Rod, I want to see a video. I want to see the things you say in your live stream. I'm like, why didn't Rod make a video about this? Like, you mentioned two things recently. I might send you a message. You mentioned two things, and I was like, yo, this is what you need to be sharing with us. Okay, so on top of the market crashing the way it did at about 11 a.m. on Friday morning, I was at work on Friday evening. I think it was about 5:30, I want to say, and crypto it tanked too. And so I had to stop what I was doing for a minute and just, I didn't have orders in, but yeah, I had to make a quick stop for some XRP, Bitcoin, and Ethereum, I think. But yeah, I didn't have as much um, money available in my crypto app for that dip, but I deployed what I had there. But yes, um, quite a few things got some attention on Friday. But yeah, Friday night it continued with that dip on crypto. And for those that were not done building up their XRP position, they saw, when it came down into like the 179 ish or even a little bit lower, gave an opportunity if you were ready for it because it didn't last long. But yeah, there was also a lot of complaints from people that I've seen that their orders didn't go through. So I didn't have that issue. I use Webull Pay, or they combined it back together basically now. But I have most of my crypto like that on Webull, and then I have my FBTC over at Fidelity. Okay, Trenton was loading up. Oh, Trenton, I'm sorry. This is 3:20. Trenton was asking about what did I think about the flash crash. I think I've been talking about it a little bit throughout the show. That's funny. I still have ChargePoint waiting on the electric car boom. Listen, I hope ChargePoint has its day. Okay, guys, make sure to like, subscribe, hit that notification bell. Check out my latest videos. Feel free to leave me any comments, questions that you have. Again, thank you, Keenan, for popping in today. Dr. Ninja put $50 into his emergency fund. Okay, that is also a very important thing that we need to focus on, having money on hand so that we don't run ourselves into debt, or as I always say, that we're not selling our investments before we're actually ready to. Don't look at your 401k or your or any of your investments are not, if they're not supposed to, if they're supposed to stay invested, let them stay invested until you are truly ready to let them go. Don't look at them as the emergency funds. Okay, I'm scrolling back up to the top. Lucy, thank you for stopping in today. I don't know if you're still here. Okay, so all right, I'm going to go back down to the bottom. Rod, look at the auto industry directly with electric cars. I worked in the industry for 12 years. Okay. ChargePoint will have their day. Yeah, that's a miserable investment right there. That's one if I had if I if I had the money mindset that I have today, that stop loss would have triggered and my charge point would have been gone. Okay, what was Rod shopping for? Sui, Bitcoin, Ethereum on Friday. Okay, I'm not seeing any more questions coming in, but yes, investing isn't scary. Halloween is scary, but investing isn't scary. So I made it through. We all made it through another drop in the stock market. I know it's not over yet with what might go on between now and December or longer with the back and forth between Trump and China and the drama again. But we have to be ready for it. And so it's never gonna going forward, nothing is ever gonna shake me out or, turn me off to the power of investing. I actually know 2 young people that I want to encourage to open a Roth IRA, but, I have to ease into having these conversations. I don't wanna overwhelm or intimidate anyone. Even the young lady that braids my hair, I want her to get on board with her investing and, building wealth and just taking advantage of the opportunity that they have being very young. One is a teenager, one is about 30, and then one young lady is 26 of the people that I'm thinking of. But just seeing them out there working, trying to do their thing and just getting started. I don't want them I want to, if no one else is around, telling them about, you can do these things, you can get started now. And then down the road, if you're working at a company that you have a 401k and things are more built in for you and you're making more money, then you continue with that and you can scale up from there. But we don't have to let years pass while you're not doing anything. So, okay, so I'm going to wrap it up for today. Thank you guys for tuning in. And I try to be here every Sunday at 3 p.m. Eastern Standard Time. I put out videos throughout the week. I put out some posts throughout the week on my community wall. So feel free to drop me any comments, questions, video suggestions, requests, anything like that. Of course, channel membership is open if you want to support the channel in that way. Come on board and we can do, more lives, more content, more behind the scenes things together. And so I will see you guys next week. Let's see. I'm lost over here. Okay.
And to investments, she make a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you want to make some money, visit Lisa J Stocks.